Hey everyone, welcome back to Corporate Decoder. Today we are diving into a Form 8K filing from REV Group, and no, it's not about revolutionizing your living room setup. It's about some corporate housekeeping, a little shareholder democracy, and what it all means for the company. This document is essentially a corporate oops. We changed something note to the Securities and Exchange Commission, or SEC. Companies use it to quickly inform investors about major events. In this case, it has to do with changes approved at REV Group's annual meeting. The date to keep in mind is February 27, 2025. That is the day a lot of these changes went into effect. First up, let's talk about some behind-the-scenes updates to REV Group's corporate rulebook. They amended, which means changed, their certificate of incorporation. Think of this as the company's constitution. One significant change was getting rid of supermajority voting rules. What does that mean? Previously, some decisions might have required, say, 67% or even 80% of shareholders to agree. Now, it is a more straightforward majority. This makes it easier for shareholders to influence company decisions and can be a sign that the company is listening to its investors. Another update was limiting the liability of company officers as allowed by Delaware law. Delaware is a popular state for companies to incorporate in, and this change makes it less risky for individuals to serve as officers. It could help attract and retain talented executives, but some might worry that it reduces accountability. They also added a federal forum selection provision. This basically means that any lawsuits related to the company's securities, like stocks, must be filed in federal court. The idea is to streamline legal proceedings and potentially reduce costs. These aren't the only changes. REV Group also updated its bylaws. Think of bylaws as the detailed rules for running the company, like how meetings are conducted and how directors are nominated. The updated bylaws include clearer rules for stockholders who want to nominate directors or propose other business at meetings. This makes the process more transparent. Now let's look at the results of the annual meeting. This is where shareholders voted on important matters. Out of over 52 million eligible shares, about 48 million were represented at the meeting, meaning a large portion of shareholders participated in the decisions. The first big vote was on electing directors. Maureen O'Connell and Mark Sconaxney were both elected as Class II directors, each to serve for 3 years. It appears that Mark received significantly more support than Maureen based on these results. Next, shareholders ratified the selection of RSM US LLP as the company's independent auditor for fiscal year 2025, which means shareholders agreed with the company's choice of accounting firm. There was also an advisory vote on executive compensation. This is where shareholders get to weigh in on how much the top executives are paid. The vote was in favor of the compensation packages, though advisory votes are non-binding. The stockholders also approved an amendment to the company's amended and restated certificate of incorporation to eliminate supermajority voting provisions. In addition, stockholders approved an amendment to the company's amended and restated certificate of incorporation to limit liability of officers as permitted by Delaware law. Stockholders also approved an amendment to the company's amended and restated certificate of incorporation to add a federal forum selection provision. Finally, the seventh proposal to eliminate inoperative provisions, which are provisions that are no longer operating, and implement certain other miscellaneous amendments, was voted against by the stockholders. If you want to dig into the specifics, you can check out the exhibits to this report, including the restated certificate of incorporation and the amended bylaws. These documents lay out all the changes in detail. So what does all of this mean for REV Group? Well, the changes to the Certificate of Incorporation and bylaws seem aimed at modernizing the company's governance and making it more shareholder-friendly. Getting rid of supermajority voting can empower investors, while limiting officer liability might help attract talent. However, we can see that not every proposal was popular, as Proposal 7 did not pass, which could mean that there are disagreements between the company leadership and their investors on some aspects of governance. The vote on executive compensation can be seen as a temperature check on how shareholders feel about the company's leadership. These changes can have an impact on the direction of the company and how it is run, so keeping an eye on these changes are crucial. From what we can see, REV Group is making an effort to align itself with best practices in corporate governance and to address the concerns of its shareholders, but is also facing some friction with shareholders who do not approve of all of these changes. We need to keep an eye on these governance changes as they will surely have impacts on the company's operations. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and don't forget to subscribe for more corporate deep dives.